Wow, the trend broke today and we continued on the downside. Do we have more to go, or are we going to get some type of relief leading into the election and then we continue or we rise back up, right? It is a lot of indecision, a lot of uncertainty, some doubt, some fears, all those things that are rolling around, which is understandable, right? This is a very pivotal election. Our economy's on the cusp, right now. There's consumers, there's manufacturers, there's businesses. There's a lot of folks and families that are wondering what's going to happen next. It's going to be positive news for them. All right. So if you're about that, amazing. I want to discuss some earnings that released today after hours and some earnings that released yesterday that we talked on yesterday's video about how that spurred the market forward. Some indicators around our economy reports, our economic reports that are coming out tomorrow that are very important. So we'll discuss all that today. Welcome into the channel. My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders, former pharmacist, undergrad in chemistry, matriculated my way up into full-time entrepreneurship for the past 8 years. I've been investing in the markets, more so specifically trading for around last 6 years. And I want to make sure that I'm providing information, right, that is non-biased, that is informative, educational, and make sure you're doing your own due diligence. All this information is coming from my own experiences and also my clients and community members' experiences inside of Leverage University. So if you're about that, amazing. If you enjoy these videos, you've been here before, hit that like button automatically. If I can earn your like throughout this video, if it's working for you, if you're learning something, amazing. I want to get us in and out of here so you can enjoy the rest of your evening, morning, and afternoon. All right. So here's our Leverage University. You can join the community, got the full university, our mentorship. If you message myself or book a call, right, there may be a little bit of slight discount or reduction in price if you do want to join our mentorship level where I'm working with you one-on-one. All right. So Leverage Club, grab our chats, join a community of thought leaders and professionals. And there's a lot of amazing things going on inside of there each and every day. All right, so let's jump into our fear and greed index. All right, really quick, we move down into our fear range now. Remember last time, or for anyone that's new, anytime we're in extreme fear or fearful times, that is a time that you want to actually go into the fire. You want to look for buying opportunities. You want to look for what is on sale right now, right? There's red in the market, it means a sell. So you want to look for those opportunities of your favorite companies, either for long call options, meaning pick up the phone going up, or you can look for share buying and just simply buy and hold. All right. So look for and think of that as an investor that you want to look for those opportunities. All right. So we move from extreme greed back to fear pretty quickly, roughly in about a week's time span, which can happen in the month of October, which has been pretty much bullish since September and October. A little bit odd this year because we had the election on the horizon. All right. Let's jump into our economic calendar. Our economic calendar is what is the fundamental analysis that spurs the market either direction. It tells us the health of our economy. And today we had Chicago PMI, our manufacturing data in Chicago, that came in a little bit skewed, a little bit uncertain, right? A little bit shaky. We had our PCE data, how us as personal consumers, right? How our consumer goods are doing. Are they lowering? And they came in better than expected. So that was a little bit of shaky data both ways, and that may have spurred the market down a little bit lower. Now, tomorrow is going to be a massive day because we've got non-farm payrolls and we've also got ISM manufacturing. All you need to know is that's telling us really about our labor market. We've been worried about the jobs, people losing their jobs, obviously a lot of companies laying off, right? How is that doing? Whether you have a perception on the news or whether you've experienced it yourself, but it needs to be surveyed of how that is doing. Is it improving just slightly? If it's improving just slightly or above expectations, or is going in route based off the rate cuts and everything that the Fed has been trying to do, then we can spur a little bit higher and we'll get that recovery. If any type of way it's negative or it comes in below expectations, right, that is just another catalyst to send the market lower. All right, so you'll see those at about an hour before the market opens, 8:30 Eastern, 7:30 Central, 5:30 PST. All right, so look out for those data reports coming in, and then ISM comes in at 10 a.m., 30 minutes after the market opens. All right, really quick, I'm not going to go over each one of these and the in-depth nature of it, right? The purpose of this video is just so you know the direction the market is going, right? You saw the thumbnail talking about the trend break, what spurred that. And again, go listen to that trade earnings educational video, because there's a lot of nuances going on where people are like, wait a minute, Microsoft beat earnings. Wait a minute, Meta beat earnings. Wait a minute, Apple beat earnings. Wait a minute, all these tech companies technically beat, but why are 4 out of 7 or 5 out of 7 tanking right after? Right. And it's typically all of their guidances, their AI spending that's coming in just over leveraged for a lot of shareholders. And they're getting a little bit concerned about the AI wave kind of getting into a bubble. So I'll just leave it at that, that is the reason why a lot of these companies are coming down, even if they had positive earnings. It's because they've been running up for so long that shareholders and investors just need to keep beating expectations so drastically that if one small guidance piece is off, then the market's going to bring it back down. All right. So that's what's putting the pressure on the market, is you have the top tech companies that have been holding us up forever, right? For the last couple of years, that's starting to burst. And then you're starting to have the economic reports actually reveal the real truth. All right. So starting to see some cycles here that are coming into play. All right. Well, now let's go into our charts. Okay. And I'll go over SPY, QQQ, IWM, and a couple of tickers that some of you may trade on a regular and you may want just some levels on. So SPY, more specifically, you can see here that we were in a continuous uptrend right here. Let me grab it. All right. There was our trend right there. And there was our contraction top trend. So we were creating higher highs, higher lows, and trending upwards, right? You can clearly see that. But it was starting to contract in here and get a little bit stuck at the top. And this is where we started to form this lower high, right? Now, a lot of times with lower highs, right, you might have a retest or sometimes a gap and go continuation. What that means is that a lot of times it happens when the market opens, because of the futures market. It's already continuing in that direction pre-market. So you have this gap that's created in the stock or the index where it is already, the momentum is in that direction. So that is what we call a falling knife. And it's very difficult to predict where it's going to stop because the momentum is so drastic, right? The upward momentum is a little bit more controllable, because people believe that the market should go up. So they'll just keep holding and riding and riding. But when anyone's in fear, right, they're going to run, right? Or there's going to be continuous taking profit because they see that they're losing money. No one wants to lose money. So it's either profit taking or some fearful selling a lot of time from retail investors, right? But what smart investors do, or educated investors, is that they are watching this fall and looking at it as a discount, right? But watching to see where there is buyers, or where buyers want to step in. Okay. So on SPY today, the key level was 575. Okay. 575. And it tried its darndest, its best to hold that level up. Right. But it just absolutely blasted through it right off open. Okay. So here's 575. Do you see this little 5-minute candle that tried to do this and maybe get back up? Immediately came back down. Okay. So that is sometimes tough to trade because you see this big gap up here. And a lot of times what will happen, which is why I think it's tough to trade, also you got to just be patient sometimes, is that you will get a gap down and rip right back up, right? That will happen and the gap will fill, and then it will rotate and roll back over. Okay. But this is called a gap and go. It will just gap down and then just continue, and the momentum continues. And you're like, yeah, is this thing going to ever stop? And then it tries to find a base at 570, that psychological level. Okay, there's a base. There's a base. It tries to go up. Nope, still can't. Still can't. Got back above the moving average and then just consolidated. Tried to make a final push at the end of the day and then got knocked back down underneath this 572 level. So that level was marked for me simply because there's multiple tests to that 572. I want to see if that can reclaim, maybe with a spur of some positive data. If we can get back above that, then that will be ultimately 570. But 572 would be a trend change, and we could probably see some momentum of an equal measured move come back up to retest this 575. Okay. Now, if we reclaim, something crazy happens and we reclaim 575, I don't know what needs to happen. Oh, it's just ISM and non-farm payrolls just absolutely blow it out of the water. Cool. Right. Then we can fill that gap back up and none of this was null and void. But the direction right now, the economic reports, the downward pressure on all these tech companies, it'll be hard pressed to get all the way back up there without testing these lows. Okay. So what I'm looking for is ultimately the bottom end of the range first before rotating all the way back up very quickly. Okay. So sellers want to take their profits ultimately, or want to drive the price down to this level where the buyers are present. So anywhere in this 565 to 567 range. Okay. It's a pretty wide range around this area here, right? 567 to 565. This area right here needs to hold up, because if we somehow, some way get below 565, lights out, right? Lights out. And you're talking about now coming down into 550, right? 555, where we've been trying to come back into, like, the whole trend has changed. You're talking about giving back this whole move and coming all the way back down here like this. Okay. So please be mindful that that is a possibility. Hopefully we get some type of retest before we do that. I would love to play this downside. I don't like to play or trade personally. I'm not more of a momentum trader. I'm more of a break and retest off of levels, risk to reward type of investor or trader. So as it's approaching this level, I'm not even thinking about puts, right? I'm thinking about calls and react off this level. I want to think puts on a retest of 575 or a ultimate retest of 579 and roll back over, right? So we shall see what happens, but hey, the market does what it wants to do. Okay. So look out for that on SPY. QQQ really quick, because I want to speed this up just slightly. I don't want these videos to be too extensive because I want to get us in and out of here. It should be quick updates. All right. QQQ again broke trend, and it's ultimately because of all these tech earnings that are coming in with soft guidance, and it's breaking trend. There you go. It broke this 487, 486 trend. Now it's turned it into resistance with a strong candle close below. So ultimately, again, data needs to happen. Apple needs to recover, but you see this gap below here. 580 is your next level. Okay. Just look out for 580 as that next level to try to hold up something. Okay. I told my community last night that if something gets drastic, these gaps can just absolutely fill. I mean, you got 575 below. It is getting ugly. Okay. I need some relief off these levels so I can find an entry on these puts. Okay. So 580. And then ultimately, if 580 breaks, you're talking, shoot, that gets dangerous. 575. Okay. That's really where I see buyers next. Somewhere around in this range. Okay. 578 to 580, anywhere in this range. Okay. So look out for that on QQQ to get a little bit of relief, and you want to take it back up to where the resistance is if it approaches down there very quickly, right? If you see a massive red candle, either sit it out, chill, whatever. But in my opinion, I would not try to chase puts unless you're in and out, and because you're approaching these levels. Just my opinion. Okay. But if you trade a different way, awesome. IWM 215 needs to hold. Okay. 215, 216 needs to hold. Again, a trend break is coming into these support levels, equal lows. And then you've got all the way down here where the next level of support is 208. Okay. So you see these channels that are holding in these channels right here, 215 to 221. That channel needs to hold and rotate back up. If the channel breaks, you're coming down in the next channel underneath 215, back into 210, and then 208. Okay. Apple, levels on Apple. Apple's all the way down at 221. Again, all these charts look the same. The trend is broken. Coming down to 221, needs to hold this equal low to try to rotate back up and then form another lower high to rotate back down to back to 215 or so. If we fall immediately for some reason, coming down to 215, but look at this 220 to 221 hold up, and then look at the 215 lows down there. All right. So I don't know why that candle just did that, but you can see what's happening here. Okay. It's already down at 221. Okay. NVIDIA. This is one that personally, myself and my community, we were looking at calls on NVIDIA, and actually NVIDIA was holding up the best at its support level while everything was continuing, but it couldn't get any momentum back up because the market had so much selling pressure, right? You can see here that there's a lot of buyers that just held up this level all the way through, consolidating, trying to rotate back up, but just couldn't get any momentum going, and then it got slammed back down underneath that 135 level. So tomorrow what I'm looking at is a break of 135, get back up above 135, or gap up somehow, some way, and then see if we can find a little momentum to continue. I would love a gap up because I'm personally in a short swing on this. So I would love for it to rotate back up with the help of the market back to 136, reclaim, and then ultimately back in this gap fill slightly to 137 and some change. 139 would be a dream, okay? Very similar to what happened here. 139 would be a dream. So we're looking at this double bottom to rotate. All right. So watch out for 130, 131. If 130 breaks underneath, you can flip short and go down to 127. And if it gets even weaker, you've got lower. All right. So again, play the support ranges. If they break again, kind of like what happened today, hopefully we gap up or gap down based off that news in the morning. All right. Quickly, Google, love it. Watch out for Google at 168, 169 for calls back up, or shares at any point. I love Google, how it's looking. Watch for that level to hold. If it breaks, right, maybe be patient and wait for lower, but you're looking for more upside on Google back to 180, 190, and 200, okay? Microsoft, still some selling pressure back into 405, 406. See if that can hold. You can see here, buyers, 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 everything's coming into support. All we're looking for is a little bit of relief, right? I'm not personally looking for a more big upside right now heading into the election. We're just looking for maybe a little bit of that November 1st relief that happens sometimes when November hits a new month. All right. So hopefully that can spur it on a Friday. We have a green Friday, and then cool, election, knock it back down, do whatever on Monday, headed into the election. Just saying. All right. That would be a dream. All right. Amazon, amazing. It's up at one. You can see here. If I turn back on the after hours, I just want to show you what Amazon looks like. See this massive green candle. Amazon blew it out of the water. This is what a trend hold looks like. So I like to make my trend lines blue, dotted blue, bold. That is what a hold of a trend line looks like. So Amazon was the only one other than really Google and Amazon held its trend line and continued up higher, right? So that's what holding a trend looks like. You can see that NVIDIA is trying to do that, and it may have a little help simply because Amazon and NVIDIA are associated with that CapEx AI. So that was mentioned in Amazon's earnings call, which could be good for NVIDIA, right? Spurring a little bit higher. You can see what it's doing in the after hours. Hopefully it gets a little bit of continuation there. And I like that it's holding its trend. Okay. So AMD, right? I like AMD. We have this saying inside of our community. There's community members inside of Leverage that just literally do not want to touch AMD. I get it. But if you do want to, I don't think anything's wrong with waiting until it is a lot lower, extremely overextended. It went from 174 to 144. You're talking about a massive pullback on a company, in my opinion, that still has a lot of potential, still has a lot of competition, right? Competition with NVIDIA, but there's a little bit of concern in the semiconductor sector. But if NVIDIA blows their earnings out of the water, AMD had decent earnings, right? Then that could spur AMD back up. So be on watch for this to recover pretty nicely off this 141 level. 145 reclaim, anywhere between 140 and 145 for AMD, look for it back to that 153, 150 level, and then ultimately back up into the trend line here of 160. Okay, if it breaks trend, then we're rotating out of this and we're back up to that 190 and then ultimately back to 200. Okay, so keep your eye on for AMD. Long dated calls, be patient, or just dollar cost average into shares. All right, I'm not even going to mention SMCI. We already talked about that yesterday. Right, hopefully it gets some spur attention. Maybe some news comes in, said, hey, you know, recovery, and they do a little sympathy bounce right back to the upside, and that helps my NVIDIA out. All right, so I'm not touching this right now. It is what it is. All right, we went over Apple. We went over Meta. Hopefully it gets some recovery. Meta levels. You want to look at this 561 hold and see if that can hold and get a little recovery for a retest back to. I'm going to put the retest smaller here, right? Because it broke through this level pretty strong. 577. Okay, 576, 577 to retest this level right here that it broke down underneath. If it can reclaim 577, 578, then we've got 583 and ultimately back to 589, 590. So maybe Meta and Microsoft, a lot of the techs that got beat down can get a little bit of relief that would help the market slightly. All right. I know a lot of folks, I'll go over Tesla and then Palantir because a lot of folks want to know about Palantir sometimes. Tesla giving back almost the whole move, right? I can see Tesla all the way back down, filling this gap back down to 210, but the market would have to get extremely weak, which it already is. But look out, Tesla's actually making some really nice like break, retest, just forming this nice continuation trend down, but it's doing it it killed its earnings, remember? So got to look out for this 250 level to potentially reclaim and hold. So I'll mark that. Looking for that 250 to hold and spur the market back up. See if it breaks trend, which would be this moving average right here, which will be 257. Then we'll spur it back to 263, 260, and see how we react there. All right, so there's my levels on Tesla. 250 hold. See that holds tomorrow, and that could be a nice support range that buyers want to step back in the short term. Okay. Let's see. Palantir. All right, taking some selling off. Right, we talked about this. Palantir overextended, double top has officially came in at 45. It is pulling back to 41. Right, that is where some buyers are, but ultimately Palantir back to anywhere at $30 to $33. Okay, Palantir back to 30 and 33. Honorable mention with our quote unquote small caps, right, is that pullback on Hood. Jeez. Okay, right to its moving average. Did not get out of my leaps, so hopefully it recovers. And we somehow had a double miss. It was just running too much. I mean, it went from about $8 up to $28, $29, and it needed a cool off. So it got its cool off, but I still think it's a great buying opportunity long-term for Robinhood. So watch out for Robinhood to hold this 23 to 24 level and hopefully retest this and take it out and go back to 30 plus. All right. Hopefully by the end of the year, that's what I'm looking for. So it's sitting right on that weekly 20. So that's very interesting right there. You can see, hopefully it holds that up and spurs back up. All right. I think that is, that's pretty much it. Other than Merck, pay attention. I really love this chart. Okay. We got some buyers that seriously stepped in on Merck. I know a lot of people are very concerned about some of the healthcare and vaccine companies, Moderna, Pfizer, things like that. But Merck, more specifically, I love this chart, right? It's still forming higher lows. It's got a continuation. Right, it's got some bullish momentum. It's just rotating back to a nice equal low of 98 to 100. Had a nice reaction off this level. So if it can retest back down to 98 or anywhere slightly underneath 100, right, I would look at picking that up for long-term call options into 2025. Ultimately, maybe some shares if you're more of a share person. All right. That's it for me today. If I miss anything or you want me to cover anything in the next video, let me know down below. Other than that, make sure you join Leverage University, click those links and join Robinhood. And if you want to download Webull and get some free shares, is where I chart and trade on. I also use Robinhood as well because a lot of my community members do. So There's some educational videos on our channel. Make sure you check those out. And I would love to see you as a part of our community. Make sure you're staying protected in your account. Make sure you're continuously learning the skill set, and there's no fear mongering here. This is an opportunistic time, right, that you want to pay attention to. So make sure you're paying attention to what's going on, and don't miss the boat. All right. See you in the next one. Peace, love, and blessings. Talk to you soon.